Now let's talk a little bit about the future. Not that I have a crystal ball, but there are things that I think you should know about UC retiree health coverage that will help give you a perspective that will help you understand what you need to know and what you need to do with your UC health benefits as you go through retirement and beyond. Well, the future is very likely to include higher healthcare premiums over time. Healthcare inflation has exceeded general inflation for a long time, and as premiums continue to rise, fewer and fewer large companies offer retiree health insurance. As of 2025, only 27% of large companies offered retiree health insurance. That's down from 32% of large companies in 2005. It was 66% in 1988. So fewer and fewer large employers are offering any retiree health benefits. And at the same time, you may know that your UC pension is a vested benefit, a guaranteed benefit based on certain criteria. But UC's contribution to health insurance has never been a vested benefit. It is not guaranteed to employees or retirees. And one of the reasons for that is that it may be obvious to you that your premiums while you work for UC are paid for by your department. Employee premiums are paid for by employees' departments. But did you know that retiree premiums are paid for also by your department? Here's the way it works. Retiree premiums are not pre-funded. There is no trust fund that is pre-funded. It's not funded by the UC retirement plan. Instead, retiree health insurance premiums are pay-as-you-go for the University of California, and the way that the university funds them is to tax departments who are currently teaching, doing research, providing patient care, etc. The departments are paying a campus assessment fee of 2.3% as of fiscal year 2025. The department that is paying you is being charged an additional 2.3% to fund the retiree health insurance program for retirees. That funding also pays for the healthcare facilitator program, so thank you very much. I appreciate it. But that is how retiree health is funded. It's pay as you go by our location departments at the campuses and medical centers throughout UC, paying this 2.3% tax, if you will, the campus assessment fee. But having said that, the university does intend to continue retiree health coverage. It's a way to help recruit and retain employees in an environment where very few large employers even offer retiree health benefits. Our health benefits are special and they're important, and a lot of other employers don't offer them. So really, the retiree health benefits are a reason that many people work for UC. So it does help recruit and retain employees. Of course, as a socially responsible institution, UC doesn't want to add to the problem of the uninsured in the United States, but really, it's to recruit and retain. So over time, the university has had to rein in some of its costs, and one of the ways that it did that was to assemble a post-employment benefits task force. This was assembled years ago after a financial crisis and after the government started to consider UC's unfunded liability for retiree health coverage as something that would affect credit ratings. So UC's credit score, which affects our ability to borrow money to achieve large capital projects, it's affected. Our interest rate is affected by this unfunded liability, this pay-as-you-go retiree health benefit that we provide to UC retirees. So UC decided to reduce the UC contribution as a percentage of total premiums back then down to 70%. At the time, I think UC was paying 86% of retiree premiums and 86% of employee premiums. And they gradually stepped that down over time to the current state where UC's maximum contribution is set to 70% of aggregate medical plan premiums. So the way I understand this works is that UC figures out who we have to cover, who's in all these different medical plans. They look at what are the premiums for all these medical plans. They aggregate all those premiums and they say, what's 70% of that? 70%, that's the maximum UC contribution. So in those calculations that you saw earlier in this presentation, where we used the maximum UC contribution, even those examples where you were getting 100% of the UC contribution, that 100% is really 100% of 70%, right? Because UC's contribution to retiree coverage is 70% of aggregate medical plan premiums. For employees, it's way up over 80% still, but for retirees, it's down to 70%, which works out okay if you have Medicare, but if you don't have Medicare, it's really made health insurance for retirees more expensive. So it's very helpful to be Medicare age when you retire, if that can be one of your retirement goals. One of the other things that the Post-Employment Benefits Task Force did back then was to create the new graduated eligibility rules for those who joined the retirement plan July 1st, 2013 forward. That's the Group 3 retiree health eligibility that we talked about. So that's what was done back then. More recently, but not really recently, the university assembled a retiree health benefits working group that was looking at contingency plans. We've had budget crises before, so the university is trying to determine what are some contingency plans that we could invoke if we needed to, if there was another budget crisis, and try to save UC money while impacting retirees as little as possible. That was worked on, approaching 10 years ago maybe. And then the project ballooned. It expanded to become a review of coverage for all employees, not just retirees, but employees and retirees. So it got a lot bigger, and I have not heard anything recent about the Retiree Health Benefits Working Group. So if they ever make any changes, I've just not heard that they've really been actively working. If they are, it's behind the scenes, and I'm just not aware of it. But the idea here is that there's a group that was put together to come up with contingency plans if there is another budget crisis. But again, UC is not planning to cancel retiree health coverage, but there is the chance that in a serious budget situation, they might have to reduce the UC contribution again. I hope that never happens, of course, but that's what I know about the matter. And so I thought I would share it with you. Of course, I absolutely expect UC to continue to contribute to retiree health insurance. It's one of the big reasons that I work here rather than work someplace else. UC is special, and our benefits are very special. And that's one of the reasons that I work here for sure. But you won't work here forever. You're going to eventually retire. Now, if you are one of these people who are going to retire on July 1st, 2026, I want to address you for a little bit. First of all, congratulations to those retirees this year, but especially those on July 1st, 2026. There's usually a large cohort of people retiring on this very magical date, July 1st, each summer. And the reason is not because we want people to retire on July 1st all at the same time. No, it creates a big bottleneck. But there is a provision in the old retirement plan, the 1976 tier retirement plan, that makes it more lucrative for people to retire on July 1st after at least one day break in service. And it's called the inactive COLA. Okay? If you're not in the 1976 tier, tune this out. But if you are in the 1976 tier, this is the reason most people retire July 1st. It's because our retirement plan has a loophole in it, the 1976 tier retirement plan, that lets you trick the retirement plan into paying you an early cost of living increase on July 1st. When you retire on July 1st, if you have a break in service that is at least one business day prior. So in most years, when June 30th doesn't land on a weekend, most people retire on July 1st after separating June 29th. By being an employee on June 29th and separating, being inactive on June 30th, and then retiring on July 1st, you trick the retirement plan into paying you what is usually a 2% cost of living increase from the get-go. Your pension is 2% higher if you take advantage of the inactive COLA. So that's what you might want to do if you're going to retire. You might have to work for months to make up for that inactive COLA if you don't take advantage of it by retiring on July 1st. Again, if you're not in the 1976 tier, just tune all that out. But for those who are retiring this year, and including the July 1st, 2026 retirees, you're going to want to submit your retirement correspondence through UC Raise whenever possible. UC Raise is where you're going to initiate and elect retirement, right? Do everything through UC Raise and UC Raise messages whenever possible, except that when it comes to retiree health forms, you can fax them. You can upload them to UC Raise messages and submit them, but UC Raise is not designed to receive those forms automatically or easily through UC Raise. You know, your marriage certificate, your birth certificates, those kinds of things, by all means, upload. Use UC Raise. But when it comes to retiree health forms, you can also fax. They do like them faxed because their fax system is set up to make it easy for them to drop those forms into your record on UC Raise. So fax is a good way to submit retiree health forms. Of course, Nick and I will help you with any forms that you might need. They are usually related to Medicare coordination. And you've heard me say it many times. Call us 3 months before. We will help you with Medicare. Keep in mind, people who retire, that UC Davis, UC Path, if you will, pays for an extra month of coverage when you retire. So if you're going to retire July 1st, your health coverage does not end July 1st. It ends July 31st because UC pays for an extra month of coverage the month after the month in which you are last on pay as a way to give you more time to get Medicare and get that Medicare coordinated with your UC coverage. So that's why there's this extra month. As long as your department enters your separation reason code into UC Path correctly with the term retirement, if there's a separation reason code of retirement that they use in UC Path is designed to pay that extra month. So you'll have coverage through July if you're a July 1 retiree. August 1st will be your first date of retiree health coverage if you qualify for it. Now, if you do qualify for it and you are age 65 or older or otherwise eligible for Medicare, or you have family members who are age 65 or older or otherwise eligible for Medicare, well, you're going to need to enroll in Medicare and you're going to need to coordinate Medicare with your UC retiree health coverage, which Nick and I will help you with. You're going to need Medicare Part B to begin August 1st. So I would encourage you to call us in late April, early May, because the earliest you can apply for Medicare Part B and get it August 1st is May 1st. And we can't have everybody call us on May 1st. That would be bad. So call us, late April, early May, and we'll help you with this process. Okay. And of course, if you turn 65 after you retire, again, call us 3 months before the month in which you turn 65, and we'll help steer you. Now, I want to warn you that UC Raise is not designed to handle the Medicare coordination well as you go through the retirement process. Your personal retirement profile, your PRP, if you're eligible for Medicare, will likely misquote your medical insurance premiums because it's not designed to factor in Medicare. And Medicare insurance premiums, UC's Medicare plans cost less. They have lower premiums, and they're not going to quote you those lower premiums. They're going to quote you the non-Medicare premiums on your personal retirement profile. That's normal. Don't let it concern you. It doesn't mean that you've done anything wrong. Just stick with Nick, stick with me, and we'll keep you out of trouble. But here's some other information for you. If you expect to be covered by retiree insurance, please make sure that the health insurance section of your final confirmation letter that you get from UC Raise, please make sure it isn't blank. Now, it may not say the right premium or the right medical plan names, because again, it's not designed to handle Medicare coordination well. It's going to give you the non-Medicare information. So it may be wrong, but as long as it's there, I'm happy. If your final confirmation letter from UC that you read through UC Raise, if it's blank, in the health insurance section, if it makes no mention of your being eligible for retiree health coverage, take action. Reach out to the RASC and make sure they know that you expect to be eligible for UC retiree health coverage. And now a brief conclusion about retiree health coverage as you conclude your career with UC. Remember that whether you're an employee or a retiree, your local healthcare facilitator program, which is Nick Robledo and myself, we are here to help you. We are local. We can almost always help you with what you need, even though we don't work directly for the RASC, even though we don't work directly for Social Security or Medicare. We've put the pieces together to be useful. We provide education and assistance with UC health plans and Medicare. We absolutely provide assistance to those coordinating with Medicare and enrolling in Medicare. And the best way to reach us is by phone, due to the complexities of health coverage. We prefer to speak by phone because there are so many variables. It's very difficult for us to answer questions by email because we have to know several things about you in order to give you correct answers, which is not to say that you can't email us. Absolutely, you can email us, but if you do email us, please include your phone number so we can give you a call back in case we don't have a quick answer for you by email, in case we need to know a little bit more so that we can get you the most accurate information that we can. This document you see here on the right side of your screen is our program flyer, which includes all of our detailed contact information. If you look at the back side of that flyer, you will also find a whom to call reference that will help you understand when you should call the healthcare facilitator program, when you should call the benefits office, when you should call the RASC, that kind of thing, when you should call Fidelity, etc. So that document is useful, and it's on our contact subpage. If you go to our website, hr.ucdavis.edu/HCF, and then click on Contact Your Healthcare Facilitators, you'll find a link to this document and the whom to call reference that I mentioned. That concludes health insurance after you retire. Thank you for your attention. I hope I have been able to smooth your transition to retirement, help you plan for retirement, etc. And I want to say thank you for your service to the University of California. And I also want to remind you that I am still at your service. We healthcare facilitators are still at your service even after you retire. So hang on to our contact information. You call us when you need us. Congratulations on your plans, and reach out to us as needed.